I'm at the desk today with Bill Evans, Chief Economist of Westpac. Thanks for joining Westpac Wire, Bill.
Hey, Michael.
You've recently been overseas. That's always nice. Can you tell us a bit about your trip, which investors you saw, and the general view on Australia at the moment?
Look, I think that they've got a little bit of advice for us. I think the first bit of advice is that the really big issue that is confronting markets and central banks is why is wages growth so low?
Yeah.
And the case of Australia, our wages growth is the lowest we've seen, which is dragging down the confidence of consumers, which I think will mean we're on a much lower growth trajectory than we've been used to going forward. And they say, well, you've got very little hope of getting much change on your wage story because look at countries like the US, like Germany, like Japan, like the UK. They've got full employment and they can't get any wage pressures. So in your case, you're very, very unlikely to do that. Australia has no reason to raise interest rates.
Yeah.
Even though the market is now predicting a rate hike next year, it's been our view now for a couple of years that rates are going to remain on hold for 2017 and 2018. By the second half of next year, US interest rates will be nearly 0.5% above our own. And we've really only had a couple of times in the last 40 years when that's been the case. And on each of those occasions, not surprisingly, the Aussie dollar's had to take some of the downward pressure.
Yeah.
So we're talking about an Aussie dollar with a 6 in front of it rather than a 7. And I didn't get a whole lot of pushback on that from these investors.